Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is Valentine's Day Scalping. We're going to get in there and see if we can make a few bucks. We're going to look at some of the biggest strategies that we've released over the past few months, and we had a 5-8-13 sell that's worked out absolutely beautiful. We got a couple of Fibonacci trades that are in play. We got the Aussie coming into view, an Aussie sell. We've got a Great Britain pound USD sell from 26 that got a few bucks, but now we're sort of taking some heat, but things are sort of starting to work themselves out on the Forex. We have seen the US dollar sort of getting pounded right now, off about 0.39%, but it's a combination of tariffs. You've got retail sales lagging. You've got all sorts of stuff. So we've got absolutely, we got a lot going on here in the markets. Good to see everybody back. Riverlay, good to see you, Riverlay. Hey, Shane, is there an egg market in the U.S. we can trade? Not that I know of, but I'll tell you what, that's a great point. We, dozen eggs has been upwards of $10, $7. And I was in the grocery store the other day, and I made a wisecrack and a joke to the guy next to me. He was staring sort of aimlessly in the egg counter, and he goes, and I go, "Hey, is there any deals in there?" Sort of being a wise ankle, and he goes, "Actually, they're selling a case of eggs on the bottom for $6." So I said, "Hey, all right." So some of these local vendors are coming in; they're undercutting the big guys that have had to kill all their birds, all their egg layers. So it's a great point. If we were trading eggs, we probably would either be rich or broke. In the old days, they used to trade the coffee pits. I used to hear stories about the coffee pits, and guys would walk out of there either up 20 grand or down 20 grand, and it would happen fast. So eggs, maybe egg futures are going to have to be the next thing that we look at trading. Great point, Riverlay. All right, guys, let's get right out to price action here. This is the 5-8-13 sell we brought out yesterday from the U.S. dollar, Japanese yen. We did this one during our workshop. Got a lot of great feedback on that. I want to thank everybody for watching it. 5-8-13 is going to be a video that we put out probably either this week or next week. I'm not really sure. I got to look at the schedule. But if you do see a strategy that you like, send me a private message, drop a PM in How to Trade, or just leave a comment on one of the YouTube videos, and I'll be more than happy to build out maybe more concepts like that. But this 5/8/13 was great. We had sort of a sell right in here, right in there. It crossed over, nice big crossover. We sort of had that RSI. I've been really leaning on RSI for confirmation because it is easy. It's very, very simple to use. Overbought territory, we're looking to sell. There's your crossover. The 5 crosses the 8. Price gets established beneath all 3. Bam, we're selling and we're off to the races, up about $550. US dollar's taking some heat. If I was making this trade right now, I'd say, okay, do I stay in or do I take it off? I'm an old futures trader. Anytime it goes $500 or $600 in my direction, if it happens quickly and without pain, I'm leaning towards taking the money. I don't believe in giving money back to this market, especially if it's been awarded to you. I had a trade in gold I'll show you a little bit earlier that was good for about 300, and it unfolded in 5 seconds. I wasn't about to give him that money back. But in any case, right here, nice little trade. So I'm going to go ahead and close that one out as a profit. If in fact you're scoring at home, or if you're shooting for this bottom of market structure, understand that you're okay. You're still okay. There's no reason to exit the trade other than personal preference. The question that I get over and over and over again is, Shane, okay, I'm in the green. I'm way ahead. What do I do now? Well, you got options. A lot of traders firmly believe in moving their stop loss to break even, and then they call that a risk-free trade. Well, if it goes in my favor, great. Well, if it doesn't, then that's great too. I don't like that. You can do it. Do it. Just be consistent. For me, it's all about, okay, well, that's great. We just moved to break even. That's fine and dandy. But right here, we're still up $500, $550. And don't forget, you took that initial risk. So, I always talk a lot about psychology, especially on a Friday. But when you take this trade, when you're selling, okay, our stop loss is up here. You took the risk. So the old, the mathematicians out there and everybody that is sort of a traditional market analyst or anything is going to say, hey, listen, whatever risk you take, you got to get at least twice that in the markets. I don't agree with that. I think it's more like a 1-to-1. I think there's so much room to really figure out a trade management that you can win with. But what I'm saying is remember, every time you took that sell, we took this initial risk right here. So some of the time, I don't care how good your strategy is, some of the time it's going to blow up in your face and you're going to get routed. Okay, that's one thing. So if you're moving, think about it. If you're moving your thing to break even, okay, you've got to have some statistics that say, yeah, once we get X amount out here, then the odds are really in my favor that we get into a runner, and that's what moving to break even is all about. Be very careful doing that, because I see a lot of traders that'll go a few ticks in their favor, they'll move to break even, and inevitably you're stopped out. Think about what you just did. You laid down, you showed up to the racetrack, you bet your money on the trade, you risked this, your initial stop, okay? You risked that. Well, what if it blew up against you? Then you're going to lose all of those trades initially, and then there's going to be a significant portion of these trades that you break even at. Okay, right now you're not profitable, and then you're sort of relying on catching the big winners to make your monthly nut and to be in on the game. So to me, I would be very careful with break-even trading. I think that it can be good. A lot of traders, though, and a lot of analysts and a lot of the guys you see on YouTube, guys and gals on YouTube, they'll tell you to move to break even because they're trying to insulate themselves from making bad market calls. And I'm gonna go into that right now because we got a couple of trades that are on the ropes. Haven't lost much this year, but we got a couple of trade ideas that are definitely on the ropes. So before we move on any further, though, this is our How to Trade YouTube channel. I know there's a lot of you that already know where this is, but if you're watching and you don't know where this is, be sure to check it out. We dropped a new video today, and this is on the How to Trade Calm YouTube channel. We're a small family, but we're growing. We got 282 videos out there, and what we're looking to do here is just bring you strategies and all sorts of things in the markets. This was a video that we put out last week, a 9 EMA trading strategy, one of our biggest ones, and I'm going to show you how to make your entry points better with Fibonacci retracements. That's sort of my weapon of choice. So we've got to be able to really make our improvements to any strategy that we have. Remember, never stop tweaking a strategy. Never stop working on it. Just when you make a change, be consistent. If you're not consistent, you're going to lose money, almost guarantee it. So right there, that's the one that just dropped a few hours ago. Go ahead and check that out. If you like it, let me know. If you don't like it, let me know. I don't care. Either way, just want to hear from you folks out there. And if you want to talk trading, come by the trading room and send me a PM. I'll be more than happy to to talk shop with you. All right, compound trading was last week. Not many people watched that one. ICT kill zones. That was a pretty good video. You guys interested in when to trade, you got to check that one out. And then we've got all sorts of stuff on coding. I'm doing a lot of coding right now. And then opening range breakout. A lot of folks really liked that one. So that's our YouTube channel. Be sure to check that out, our new video today, which is the 9 EMA. So, we're talking scalping, and it's important that, when we scalp, we at least have a uniform approach to the markets. A lot of folks, they just scalp and it's willy-nilly. They jump in and they buy and they sell. And they say, okay, I got a few ticks here. I'm going to go ahead and leave. Okay, I lost a few ticks. I'm going to go ahead and leave. That's not scalping. Scalping is being disciplined and understanding when and when not to get into the market. So I'm just sort of looking for a scalp trade today on the back of a huge miss on retail sales. Have a lot of folks talking recession. It's got our currency markets all over the board right now. But right in here, I'm sort of watching gold relatively closely. You can see right here, you got a 5.8. This is our 5.813. The red is the 5. The middle one's the 8. The purple one's the 13. The 13 is my favorite. Typically, that's the one that I trade in real life, as opposed to this strategy here, which is a great way to scalp, but not necessarily doesn't really dovetail into what I like to do with the Fibbies. So we're going to be doing that. Bobby Bob, good to see you. Bobby Emmanuel, good to see you. So you've got a lot going on. You just don't really have a trade yet. Now, we've got some crossovers, and we could have went short up here. The problem is we're trying to incorporate what we call confirming indicators. And for me, the RSI is the one that I featured over the last couple of months in the trading room. And the reason why is because it is easy. So you got the RSI right here trading right around 50%. That's not going to get us much of anywhere with a trade. Remember, above 70, we're looking to sell. Below 30, we're looking to buy. And the way that we do that is we get our crossovers up in here, the 5 to cross the 8, and price has to be opposite of all three or else we can't trade it. So let's see if we can find a trade and really show you what I'm looking at here. I want to go real short time frames. I typically always kick over to the futures markets because, I prefer the volatility of the futures. They give us a good chance to look at some of these strategies and get price sort of, in overbought or oversold territory. So if we're looking at the NQ, this is about as volatile as it gets, E-mini NASDAQ futures, and we're really just sort of trucking right along in what I would call a rotational day. We haven't done anything. We're just sort of rotating around. Right now we're getting some bullish participation in the early U.S. session. So let's dumb this down to about a 1-minute chart and see if we can get anything else going. And you can see we're lagging a little bit with our EMAs. A lot of data. This machine used to be fast. Not much anymore, huh? Bought it last year. It's only got a year's shelf life. I guess I'm going to have to get another computer here. In any case, you can see right here. Okay, so we're approaching sort of a trade here. So the way that we would execute this 5.813, or at least look for a scalp, is going to be waiting here for a minute. Price looks like it's going to get in overbought territory. Let me blow this RSI up a little bit for you. You can see once we get up over that 70, then we're going to look for a sell. The way we're going to sell the market is the 5 crosses over the 8. Price has to be beneath the 5, the 8, and the 13. The 13 is critical. Don't forget the 13. Don't forget the 13. Don't forget the 13. So that's one of those that we're watching relatively closely for a scalp. We're not quite there yet. We're not right there yet. So if you're interested in scalping, be sure to check out Switch Markets. They can get you up and running with your favorite products, your commodities, your stock CFDs, and also your favorite Forex pairs. Week 6 was interesting. Super Bowl Monday, I was out. The least productive day of the year claimed me. I didn't get much done on Monday, but that's okay. We were back Tuesday, Wednesday, Thursday. It actually turned out to be a huge week. The big themes for this week are hot CPI numbers, hot PPI numbers. No matter how you sugarcoat it, inflation is still a problem. And today's retail sales numbers suggest contraction, economic contraction. So right now, you sort of have to put out of your mind all of the things that, your fundamentals. You sort of have to say, okay, we don't really have the traditional relationships setting up anymore. We don't. They're just not there. And the reason why they're not there is there's too many market drivers. You got hot inflation. You've got a Fed that's basically said, we're not going to cut. We're not going to do what the rest of the world is doing. Okay. Well, what are you going to do? Well, we got hot inflation. They're going to hold rates higher for longer. And then today's retail sales numbers, expect our next jobs report to be negative, a bad one. And you're going to have all these data sets, and the big question is going to be, how do you trade this stuff? Fall back on your technicals. Fall back on your technicals. Understand price action brings the market to levels we can trade, and then we just got to manage our risk from those levels. If we can do that stuff, we'll be just fine no matter what the news cycle does. I'm expecting a heck of a lot more chop than we've seen, at least through the first 6 months of this year. I will be honest, I'm sort of a bear towards stocks. We're going to look at stocks here in a second, but I'm bearish towards those. I think that you're going to see some real heavy stuff go on, meaning you're going to see things you've never seen. I think that there's going to be a real chance Trump goes after the Federal Reserve. He wants interest rates lower. We saw that yesterday. That's not going to happen. Interesting stuff coming our way. That's all I'm going to say about it. Right here, though, you see retail sales is sort of the big loser today. Let's have a look. Here's the hard data. Remember, retail sales, this is just a consumption metric, essentially. It's me buying things. It's you buying things, and we're trying to figure out, is the public still purchasing? Are they not purchasing? And it's sort of an indirect indicator of consumer confidence. And then also, sort of we're trying to get out in front of if there's a recession or an expansion. And retail sales, a lot of folks make a big deal out of retail sales. I don't really, but today they're shaking things up, at least with the U.S. dollar. Let's have a look. Core retail sales, that's going to be your base retail number with a few things, the more volatile items stripped out, sort of like core inflation. Don't worry about it, though. Negative 0.4%, way beneath expectations of 0.3. Remember, this is how we judge these relative to what? Our expectations in the previous release. That's a dreadful number. That's a dreadful number. There's no two ways about it. And then right here, you've got 1.3% export price index. That beat expectations. That's going to come way down because you're having tit-for-tat tariffs. Say that 3 times fast. Tit-for-tat tariffs. You're going to see these export-import numbers are going to be just out of whack, and that's going to happen relatively soon. So I really don't care about any of those. As far as the retail sales number itself, it's bad. I mean, there's poor numbers and then there's bad numbers, and you've got negative 0.9% beneath negative 0.2 expected. 0.7% were the revisions to the previous release. You guys can all see what's happening here. From a political point of view, I don't honestly. I'll throw a disclaimer. I don't care if you're a Republican. I don't care if you're a Democrat, conservative, liberal. I don't care where you're from. These numbers right here, we have to understand that they're politically motivated. It is what it is, and that right there is what we're seeing. Why would retail sales numbers be absolutely hot in December? You also remember they revised up all those jobs numbers in November and December. We're getting ready for a collection of numbers that's designed to really depress consumer sentiment and put a hamper on the new administration's policies. It's going to happen. There's a lot of angst out there, and believe me, a lot of these folks that report these numbers, they know that. I won't say that they're a part of it, but these numbers, I don't believe one of them. But I will tell you this, we're going to go into a situation where the numbers are going to be bad and they're going to be decisive. We still get to trade it. So, I mean, when I step back and I say, I really don't care what the numbers are, I just got to know what drives participation in the market and what to expect. That's what we want. And that's what's going to get us into these trades. And we're going to look at our technicals, and we're going to have an opportunity maybe to buy markets and sell markets that are out of kilter a little bit. And it's going to be tremendous opportunities for us. We just have to keep our heads. Now, as far as catching trends and making great investments this year, I don't know. I don't know about that. But I know scalping, we're going to clean up. It's just the way it is. So really a dreadful retail sales report right here. U.S. Let's see, retail sales in the U.S. contracted by 0.9% month over month, much worse than the forecasts. And following an upwardly revised gain, they've revised all the numbers from December up. It's because it's the end of the Biden administration. There's no doubt about it, guys. There's no doubt. I've seen enough. I'm going to make that call. Why would I say that? The U.S. Census Bureau. These are government bureaus. If you guys have followed politics in the United States, the Trump administration's firing a majority of the people that work for the government. This is a weird situation we're going into, and I think it's unprecedented in a lot of ways, and you can see just how bad this is. It's a horrible number. It's horrible. So what does all this mean? Well, I mean, for our prices and our scalping, you can see that you've got a lot of things that are on the move. You got a lot of things that are on the move, and all of a sudden the U.S. dollar is getting pounded a little bit. You remember this Australian dollar? We had a level right up in here, right around 64, that we're looking to sell, so this one's coming into play. I'll have a full recap of the trade plays that we have. I haven't covered them at all this week because nothing's really happened until today. Today we've got a game on and several trade ideas, so I'm going to have those recapped with the performance. We'll go over those Monday, but for today, we're just going to go ahead and trade. As far as your Great Britain Pound USD, this one's interesting, and this one sort of came right to us. I like this trade. I like this short, 126.10. Pretty good short. I think we were scalping to the short in front of 126. Don't be surprised if this thing fizzles out right around this level and you get a decent retracement on this trade. I have a lot of confidence in this Great Britain pound trade. I don't really see the U.S. dollar staying on the ropes for very long. As far as as far as what we're looking at right now with our scalping, you can see we aren't quite into overbought territory yet. So that's why doing this live is sort of it can be a very difficult thing because we're always looking for trades. 1 minute chart, E-mini NASDAQ using the 5813. I would love to get this live, but we're just going to have to wait for a second. I'll try another market here in 1 minute. Back to the Great Britain pound. You can see what's happening. Spike high, spike low, nice 38%. That's sort of the line in the sand. Let's go down to a 5 minute chart here and see exactly what's happening here with this key level. Now, if we're high impact scalping, and I'm going to show you exactly how I approach the markets, 126.10, let's say that's our magic number. I'm looking to sell right in front of that, and I'm looking to pick up on what we call the easy money. I want to do something just like this. I want to try to catch that at first approach and then get that quick pullback if we're scalping. So right there you can see we sort of approached it, 126.08. That's pretty darn close. That's 2 pips. You're coming right back down to 96. That's a high-impact scalp for about 12 pips. That's solid. We go up and approach that again, 126.09. That's within a pip, something like that. And then you get a real nice pullback there of 9 pips. That's pretty good stuff. Now, do you take a position doing things like that? No, you can't really take a position if you're scalping. We had to be ready to jump, and as soon as this level broke, then we rallied all the way back up to 126.30. Now, you've got to be very careful here because if in fact we do get a close, I'm looking for any type of 5-minute close, 30-minute close, daily close beneath our magic level, then we're in great shape. We're in absolutely great shape to get our downward trajectory back down to where we want it, which is going to be, well, geez. See, we're having issues with this platform. No two ways about it. Something like this, that's what we're looking for. This is the area that we really want to attack with a position short. The problem is we've got an area that was legitimate resistance, topside resistance. It's now setting up a support. So we've got sort of a swing high up there. You don't want to hold shorts necessarily right now unless you're already committed and you've got your stop loss maybe up here somewhere, maybe up around 50, 59. Then you could probably get away with this. But for right now, if you're scalping, you don't want to be holding a fresh short. Now, where you could go short is if you get a close underneath that level, and then we can look to really attack the downward trajectory of this trade idea. But I love the level. I would be surprised if bidders win from here. All right, I'm way behind on the live chat, guys. Let me see right here. Facts X Suspense. Good to see you. New name. Welcome to the room. Welcome to the live streams. Hi, can you please tell me when trading on the EMA 8 and 21, normally we can enter on cuts when the 8 cuts 21 either up or down. But my question is that how can we avoid when the EMA cuts again and again and again and it hits your stop loss? Yeah, what you have to do is you have to really make sure that you stay out of well, I'm going to show you. I'll show you how right now, facts. You got to design your stop loss, base it on market structure. And I'm trying to build something that's back tested. We're using some AI to back test some of these strategies. And what I'm having a problem with is getting the AI to put my stop loss in the right place. So I'll show you right now, facts. Absolutely. Emmanuel, I asked the same question over the app yesterday. He answered, I've not visited the app yet. He's been sleeping. I did the night shift. All right, well, here we go. What we've got here is please tell me when trading the EMA on the 8, we can enter on the 8 when the 8 cuts the 21. Well, I mean, I'm not following you really with the 821. We haven't covered that strategy. We've covered the 920. We've done that one. But like, let's say we'll do a quick example with the 821 here. Let's see. All right. We're still not getting our trade. Okay, so let's go ahead and just let's go ahead and just create a new layout. All right, this will do. All right, so if you guys are trading in 821, I have no idea. I mean, that's the first I've heard of the 821. Let's go right here to a simple moving average. Somewhere right down here. Boom, boom. Okay, we'll add 2. Let's go ahead, do this. We'll get rid of our volume if you guys don't like volume. Right here, 8. I always make my shortest ones, I make them red typically. Okay, that's our 8. Let's go to a 21. Long terms, I typically use blue. And then we'll just leave them based on the close. Okay, so if you're doing an 821, so your question essentially is this. It's why am I getting chopped up and stopped out? Well, the first thing that I would say is where are you putting your stop loss? Now, a lot of traders, what they'll do is the 8 right here, the 8 across the 21, and that'll be a signal to go short, and then they'll stay in the market until we cross back over, and then they'll reverse their position trying to get in on the big runner. Okay? Nothing wrong with that. Nothing wrong with that at all. A lot of traders, though, would say, okay, I want a static stop loss and a static profit target. So let's go ahead and just isolate one. Listen, your trading session has to begin sometime. I'm not just going to pick a winner here just to pick one, but I'll show you one that did in fact. Well, this one probably would have got swept out. All right here. We've got a crossover. The 8 crosses the 21 right there. So where, in fact, would your entry be? Would you just buy the market? A lot of people would. Okay, that right there is your entry. Where would your stop loss be? That's the question. Now, if your stop loss, if you're just going to exit the market the next time that these EMAs cross over each other, you don't get stopped out because you don't get a crossover. For me, I don't know about that. I don't know about that because what happens is you could be on the hook just for a tremendous amount of money, especially if these EMAs were really wide. You get a big correction and just have to go for the ride with it. So if I was looking to take this trade right here, there's your crossover, there's your buy. My stop loss would be either below that swing low right there or below that swing low right there. So that's where your stop losses would be. You could either put it there or you could either put it there. Now, a lot of traders are going to play really tight with this strategy, and they're going to try to do this. They're going to put their stop loss right beneath their signal bar or the bar that's going to get them into the market. There's your entry right up there. Stop loss is there. It's too tight. You're going to get stopped out a tremendous amount. Very rarely do these markets cross over and just go to the moon. Typically, you see a lot of this before you get your big move. Now, on a 5-minute chart, your risk really isn't that much. You're down beneath this swing low. That's the one that I prefer, at least to begin with. Now, if you do get a nice big move, then you could move it up to maybe one of these other ones. But for there, I would make an initial risk right there. So the question is, what happened on this trade? You got stopped out. Bang, right there. What happened right there? You got a big flood of volume at 5:10 a.m. Eastern time, 5:10 a.m. my time. You got a big move, and that wiped us out underneath that. So that would have been your stop. Now, the beauty of this is okay, well, Shane, you say, why would you take a stop there? The market rebounds and goes up. I said, yeah, but we haven't got the crossover yet, so there really technically isn't any reason to leave the market if you're looking at crossovers as being the end-all, be-all. But if you're here, let's say price is here, and you're still holding longs, and let's say the next candle is just a massive one, the crossover will develop, and you're going to be on the hook for potentially a lot of money. So I like to build my stop losses on based on market structure, and the reason why is even though we got stopped out here and we missed, it's going to keep you out of the big danger, and that's what you really need to do. So that would be how I would answer that question. I think I did pretty much it. Essentially, what you have to do if you're going to be a crossover trader, and let's say you are trading something like a 5-minute time frame, you've got to understand when the market's alive and when it isn't. It's something that I preach a lot. Understand market state, understand trends, understand when the volume is there. If you're trading this Great Britain pound USD, if you're trading this pair on a 5-minute chart and you're doing it, in the evening time, in the afternoon, late session, early evening time here in the United States, more than likely you're going to get destroyed. And the reason why is the market's choppy. Nothing's happening. You're not getting a directional move. Right there, bang, there's a crossover. There's a crossover. There's a crossover. You don't want frequent crossovers. What you want is you want to get into a situation where, okay, hey, what do we got here? Well, we got a key economic event coming out. Something like a retail sales. We know when the retail sales number drops is right in here somewhere. So you could actually maybe, if you got a crossover before that number, you could take a shot at it and maybe get a big move. And that's because the volume's there and the volatility's there. So that essentially is it in a nutshell, guys. But as far as an 821, I'm not familiar with an 821. It is just 2 moving averages. So, we can trade it. But that's how I would explain that. I hope that helps. All right. In any case, we're still waiting on this trade. That's not going to develop. Let's do something else. Let's go over to the YM, the E-mini Dow. You see right here, we were sort of in oversold territory, got real choppy. Why would that get real choppy right in there? U.S. Open. That's very hard to predict which way that goes. As far as this right here, there was a big crossover, but we weren't quite in overbought territory. So now we're looking to buy. Why are we on a buy? Because we're in an oversold region, and now you're looking to grab that rally to the top side. So right now, 1-minute YM chart, E-mini Dow, we're waiting for this thing to reverse course. And right now, it looks like it may. What do we have to get into it? Right there, your 5's got to cross your 8. Price has to be above all three, and then you've got to really see that good move. Is that a pretty good trade? Technically, it could be a great trade for the rest of the session. Right now, I see a lot of whipsaw, and I see a lot of danger. I see tariff talk, more tariff talk today. I believe Trump has another presser. Retail sales. I don't know. All right, we have one other question in here. Facts X suspense. How can I estimate that if EMA has cut now, but after some time it will cut back again and the market will not go long or short in the cut direction? You can't estimate it. You can't. It's not possible. And I'm going to tell you why. The bottom line is this. We do not know how far a market's going to go. You don't know how big of a move you're going to get. Now, we know when our news events are coming and when volume's going to pick up and when we may get a move, but you cannot estimate how far anything's going to go. That's why I'm very conservative. I get real tired of hearing people say, well, I know exactly where it's going to go. I'm using Fibonacci projections or spirals or time zones or whatever. And I go, you don't know how far markets can turn on a dime. They can turn on a dime. What these strategies can do is they can tell you, okay, what do I want? What do I want to do? They can get you into the market down here. They can get you in and have you on a side potentially, and they can also give you a place to stop yourself out. That is all you can control in the market. That is all you can control is where you get in and where you get out, specifically with regards to the stop loss. That's it. The rest of this, hey, but listen, there's a lot of people sitting around today going, I knew the Great Britain pound USD was going to move higher. I didn't know that, but I could tell you where I wanted to go short. That trade's going to hit. That's a pretty good one. Do I want to be short right now? I'd rather be short than long. I know my levels. I've got a stop loss up here, and I know that if we just get a little bit of action here, we'll get paid. That's what I know out of this trade. Now, do I know how far the market's going to go? No. I have no idea. No clue. Something to think about there. That's trading 101. You got to really sort of let yourself go in these markets. You got to say, okay, I don't know much or anything. And the beauty of this is making money. You don't have to be right. I'll show you a trade I took this morning that was something that, boy, look at that. I had another range number right in here somewhere. Oh, that was fantastic. All of a sudden, you've got a gold market that's in a trend day down. Okay? That's huge. You're off about 1.12%. Here's your daily chart. This is gold futures. But my trade was right here. I'll show you where it was. Very simple. It's Fibonacci trade. Spike low, spike high. I was right in here, right in there at 29.35. Right in there. Have a look at what happened. First approach. There it was. Hit it perfect. Bang. Price goes down, back up. Price bottoms out. What happens right there? The low, 2934.9. The high, what's the high? 2940.7. That's beautiful. That's a high impact scalp. What is that, 17 ticks? 17 ticks. I took 10 of them and rolled on, came back for a little bit more. You know, that was sort of the appetizer. This right here was the dinner. But I also knew that if my support zone, if it didn't work, boom, 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 bang, bang. So we've been on live stream, so I couldn't really trade that. And then the other one we were looking at was our 62%. You can see you got the same type of reaction there, but didn't trade it. We were talking. So what I'm saying is you guys got great questions. I had no clue, number one, when I took this trade right up here, 3 contracts, $30 a tick, happened fast. When I took this trade right here, I didn't know how far the market was going to go. If I knew that we were going to go right up to 29.48, I would have stuck into it and take $10 off of it. 10 ticks a dollar. I would have taken 100 ticks at $30 a tick. Do the math. You don't know how far it's going to go. But I knew we had a pretty darn good shot at getting a little bit of a retracement. And I also knew that if that level didn't work, I had to run. And by work, I mean, as soon as you see this compression and then a break, I knew I had to run. And that's exactly what happened. So right now, gold's in an absolute free fall. We might as well see if we can find a level real quick before I sign off. We were looking at 3,000, something like that. Interesting levels coming into play potentially for next week. But that's where you want to start your Fibonacci's from with gold. Pull back right there, 27.86. It's $100 down. Do you think you're going to get that? Not in this market. Let's go to a weekly. Can already tell you where I'm going to be looking to trade Monday morning. Clunky this morning, that's for sure. 28, still 90-something dollars off, $86 off. That's a big move. Let's go back to our dailies. Are we going to get a chance maybe to trade our dailies? Not really. We're going to have to wait for a bigger move before we step in and start looking to grab those discount longs. All right, guys, that's probably enough out of me today. Didn't quite get a scalp going here. This scalp right here could be very good. I'm still watching this Great Britain pound, though. Absolutely fascinating. So right here, great example. Here's your 821 strategy. If you were going to trade this thing right now, you've got the sell. Okay, so the sell developed, something like that. That would be my stop loss right there. That's my initial stop. You've got the sell, the crossover developed, and now what we're looking to do is get that trajectory down in here. We don't know what's going to happen from here on out. We could go sideways and cross over a bunch. We could reverse right back up and take us out. But for me right now, I think that's the best. That's the best. Probably. I mean, if you're looking for an 821 crossover, there it is. Doesn't get any better than that. You're welcome, Facts. I hope that works. Corey Hicks. Let me see. Do you have a video on fibs? Yeah, just check out our How to Trade Calm YouTube channel. I've got a bunch of videos there on fibs. There's a bunch of them. Also in the trading room, How to Trade Trading Room, we got the Fibonacci Counterpunch strategy. Come on into our Trading Academy and check that one out. I built that one a couple years ago, and it shows you how I use Fibonacci's. Could be instructional if you're used to or if you're interested in it. Let's see. Okay, WTI, Bobby Bob. We'll look at WTI, and then I'm going to go ahead and call it a week. It's been a long one. This is sort of a 5-minute chart. The first thing that I would say about WTI is we're in rollover right now. That's not good. Now, the volume is split between, like if I was looking at the futures contract, the volume right here is split between, this is March and April, WTI crude. It's about a 50-50 split. So be very careful. If you're trading U.S. oil, you're going to have some tracking errors to the futures contract. So be ready for some choppy stuff in the next couple of days. Now, if you're looking at U.S. oil, let's just get rid of all the indicators. Well, actually, let's use my indicators. Okay, we talked about this. This sell right here from 71.54. We talked about this yesterday. Does not surprise me at all. We're in rollover. The volume is not there. But right up here, if you wanted to sell 72.35s, you probably could do that. Let's take this down to a 30-minute chart and see how we fared from 71.54. Not bad. I mean, really not bad right there. Yesterday afternoon, there was your high right there to 71.52. Nice pullback down there to 23. Then you got another test. Then you got another retracement. And then we finally broke above that zone right during that London session. Compression pullback. Then we broke up to 50, and now we're established, and we're coming off. I'm bearish. I mean, I really am bearish. I think you're going to see the energy production in the United States really ramp up. You're going to see a lot going on here. So if I'm interested in trading WTI crude oil, the big thing that I would be hyper focused on right now, the number one level, the number one technical thing that you have to do is you got to really take a look at your long-term levels. And, if you've watched one of these streams before, I always sort of yell at the financial media because they don't know what they're talking about. Remember that the low of crude oil during the COVID pandemic in that April was about negative $40. And you go right there up to that spike high. There was I believe that was right before Russia went into the Ukraine, right in here. March of 2022. Look at how long that war is gone. What's our key level there? 38%. That's where I'm a heavy buyer at 64.30, 64.50, 65 to 64. That's where we want to be buying. And you can see we got a nice little test of that zone right there, 65.29. Not quite. We want to see a nice move down there to 64.50-ish, 64.30, and then we want to play the bounce. Now, when I'm going to say this, that level right there, if that goes, we're going to be in a new world for crude oil, and we're going to have to reevaluate. So that's the long-term view. As far as intraday trading goes for U.S. oil, I would be very careful. Today it's choppy price action. I've bailed on it. I'm not scalping WTI crude. I had a bunch of levels up there I wasn't interested in, and then right up here, you can see we sort of topped out. You know, we go right here, and then there's sort of your big sell, little bit of a rally, and then we came in with a big dump here. I would be, you know, if you want to trade this today, and that's if you can get a low to hold. I don't think you will. You could probably get away with selling somewhere up in here. Maybe I would wait for a deeper retracement because these trades aren't going to be easy. Remember, you got that spread, the rollover is huge because they start bringing the spread in. And when the big traders start bringing in the spread, what I mean by spread is you've got the March WTI futures, which is one price, and April's the other price, and you've got people that are buying and selling each one of them. Well, all of the volume isn't focused on one contract. So what you're having today is choppy price action. You can see it right here. We had really a mild open and then just a crash. Well, the volumes weren't incredibly high there. You know, I mean, it's got you down for 2,800. I mean, that's nothing. Let's take a look at the futures contract. 8,900. That's nothing. That's tight right there too. 5,000. 3,800 for 30 minutes. That's not good enough. So I would be very careful with what I was doing today with WTI. I probably would walk, but I would definitely be looking at it for next week. And as far as, you know, if you're trading the U.S. oil contract for next week, you know, your daily's got to be what? This would be the Fibonacci sequence you want to look at for the daily. I would much rather be a seller than a buyer right now. I'm not a buyer really until 64.50-ish, somewhere down in there. But these would be your sells. You probably get away with selling 71.50-ish again. 72.35 is a sell. I would ignore. It's tough to ignore that, though, because you've got a key number at 72. You could probably sell 71.94s, something like that. So I'm a seller right now, WTI crude. I don't want to buy it, but there's going to come a time when we will buy it. We're just not there yet. All right, guys, I'm going to go ahead and sign off here. I've gone way long, but you get me talking about crude oil, and I just start losing my mind. Corey Hicks, a lot of new names in the room. It's good to see everybody. So be sure to check things out. River Lay, cheers, Shane. Absolutely, you too, River. Confident everything's going well. Have a fantastic weekend. You guys, it's not Super Bowl anymore, so you know, everybody was sort of partied out this week. This weekend's going to be a lot more sleep. We're actually above 0 degrees Fahrenheit back here in Montana. The cold snap broke. We're at about 20 degrees, 19 degrees. So, geez, I'm going to be wearing shorts later today. I'm all out of time, Emmanuel. We'll get to the Kiwi next week. Just come by the trading room, send me a private message, and I'll pull a chart for you a little bit later today. All right, everybody, I'm going to go ahead and roll out. You guys have a fantastic weekend. Be sure to check your stream schedule inside the room. I'll have that out in an hour or so, and then we may have a recap of today's retail sales and potentially a trade idea coming out for early next week. All right, everybody, that's a wrap. Have a fantastic trading day. Trade the action well, and we'll talk soon. See you.